Good day, guys. We will be looking at the weekend analysis for US dollar CAD and trying to spot some potential trading opportunities that might exist in the coming week. So what we have here is US dollar CAD on a 4-hour time frame. And if you have seen our analysis of US dollar Japanese yen, you would know that there are certain things that we look at before we start trying to figure out the areas where our market might actually tap so that we can enter into positions. So the first thing that we do, we say we look at the current curve that is taking place. So this is the current curve that is happening now. And then we also look for the most recent curve. That would be the previous curve before we started the one that we're doing now. So this is our most recent curve. From those curves, we would look at on the most recent curve, we would look to mark our pull-ups and pullbacks on the upward movement and the downward movement. And similarly, if it was inverted like this one, we would say on the downward movement and on the upward side. So, but this is where we are going to first look for our retracement. So the one thing that we do as well is that we mark the start of our move. So this is where our move starts, and then this is where our move ends, right? If we look at this, we can see that this is our highest point because this point doesn't break this. So this is our last highest point for this uptrend, right? And then from there we would look at the downtrend, and then from the downtrend we can see that we are starting from this point here, and then we go all the way down to the lowest point for this move, which is here, right? And then from that we will try and chart, we will try and draw our pull-ups and pullbacks, right? So let's do that on a higher time frame so that we can have a cleaner chart and actually look at only the most important areas of this chart, right? So when we look at this, we realize, okay, this is the move that we marked up to here, and then this is the move that we marked up to here. I'm gonna remove all those drawings, and then we're gonna put our structure here. We go up, we pull back, and then we go here, right? Let me end it here and then start the downwards one. Okay, so with the downwards one, we realize that we have this. We go all the way down to this point, we pull back up to this point, and then we go down to this point. From there we have nothing that breaks below this, so that those are our last moves, right? So looking at those moves, if we go back here and say, okay, we have a downtrend here, and then we have this as the last pullback for the upward move. So on this downtrend, we are going to look for a break of this structure right here, right? So looking at the break of that structure, let's put a mark there. That's a break of that structure. So after something breaks this structure here, we expect the market to come back to the last consolidation or retracement that happens on this downward move. Okay, if we were to look at that on a 4-hour chart, you can just pull that back to a 4-hour chart. So this is what we are looking at. So this is our lowest point, and then we pull up to the to the last highest point, and then we start going down. So when we start going down, we say this is our area of interest. When we break this area, we look for the last recent consolidation on the move that broke the area, and this is our consolidation here. So on this area, we expect the market to come back to this area somewhere in the future. We expect the market to come back to this area somewhere in the future before it can actually continue down. So we can say the market owes this area. So it must come and liquidate this area, get its orders here so that it can generate some momentum to go down. Okay. So now looking at the same thing, if we come to this recent trend, right? If we come to this recent trend, we would say, okay, so we have a down, we have a pull up, and then we have a down. This makes this area our last pullback, right, for this downwards move. So if that is our last pullback, then we would look in this direction and say, if we have anything in this direction that eventually breaks this area, right? We would expect the market from this direction to pull back down, to an area of consolidation that happened before the break of this area. Okay, so which means now at the current moment we are waiting for our market to actually close above this line, which if we look at the green candle a bit, it's already above that, and since it's a weekend, it means the market is already closed. But maybe potentially it might still try to pull up just a little bit and then before it comes back. So with that being the case, then we expect that since the market has closed above this area, then the market should come back to the recent retracement that happened before the break. So this is where we will be expecting to put our buy orders. Now, with that being complete, now we have two areas of interest in this whole chart. Sorry, I'm not trying to move that. In this whole chart, we have two areas of interest. This is here at the top where the market still owes to go back there and liquidate the area, and then we also have here at the bottom where the market can potentially come in the short term. But the liquidation of this area and this area, or the mitigation of either one of this area, happens independently. In other words, this one can happen first or this one can happen first, so there is no priority as to which one would be liquidated first. Okay, so this is where we would be putting our positions. On this area here, we are expecting to put a buy position. If the market returns here, we're expecting to put a buy position, but our buy position would go up until near this area because we still expect the market to try and come into this area, right? We still expect the market to come closer into this area because it still owes the area. And if it does go into the area, then we put a sell position in this area, and then where the market will end next will depend on the analysis that we will do even further back on the downtrends and the uptrends that would have happened here. Sometimes we have nothing for reference point in the short term, and then we can go to higher time frames, and then sometimes you just have nothing at all and you just need to know when to exit. So this is the positions that we're expecting in the coming week. So we are expecting the market to either come down here, open a position here, and then go up and then reach this point, liquidate this area, hit stop losses for certain people and take profits for certain people, and then gain a downward momentum. And if it does that, and then we expect that it will continue to break below this area here. Or alternatively, the market will start here, and if it starts here, it still owes this area here at the bottom. So it will either get here, and then we would have our sell positions opening, and then the market will come here. If it comes here, because it still owes this area will give the market an upward momentum. So it means the moment it liquidates this area, the market will attempt to go up. It may not go up for a long time, it may go up for a long time. Sometimes it's just a small push and then it continues in the downward direction, depending on how much momentum it got here compared to here. So that is the analysis for USDCAD for the following week. Those are the two positions that we are expecting, and they can come in any order. Hopefully we will make some good trades. Good luck.